Hi, I'm Peter Rose, founder of Longwood Currency Trading. Is it Forex trading luck or skill? A story. A short one. But I think it's an important story because it goes from bad to stupid to worse to, is it going to end up good? Is the story going to end up good or bad? You just have to listen. It's about trading NFP. Yesterday was NFP. But I didn't know it. I blanked out for some reason and just sat down on my trading platform, did my 15-second sweep, and oops, there's something to do right now. I should do that. So I sat down. I put a couple of limit orders in because I'm waiting for the price to mature to verify my hypothesis. And so, boom, in the orders go, and I'm sitting there because sometimes when I do that, then I'll just kind of walk away, grab a cup of coffee, and then get back in. Or if things are really hot, I'll hang out. Well, things weren't really hot. Price action was normal. I had traded the last 3 days in a row, and so I was very familiar with what was going on in the market, and so I felt comfortable placing my my entry order. And I blinked, and price shot against me. Well, I was a 2% underwater on my risk. I'll tell you that. It was dramatic. That's how you do a story, right? You got to have some dramatic event that impacts the character. I'm sitting there going, what in the hell just happened? I'm 2% underwater, like that. I go, well, usually a spike like that, it was a big one too. It doesn't happen unless there's a news release or something. So I open up the economic news release thing. These are indicators like the NFP and the consumer price index and all that other kind of stuff. And lo and behold, I had not checked that day. I don't know why I didn't check, but it was NFP day and I got caught. So I'm looking at that. I'm not an economist. That's what you want to say. And I don't. I know if the NFP goes up, that's good for the dollar value or the currency value that you're trading. So they're just the basics of that. I don't want to know about economics. I'm a student of macroeconomics, but I don't want to let that bleed into my trading because that gives me an opinion, and that's the kiss of death. So I'm not really looking at the economic indicator releases as verification of some stupid hypothesis I have or whatever. I have a difficult time with that, that's for sure, because I enjoy that. And I've been looking at this stuff since 2007. So, I mean, the currency markets, I've been looking at the financial markets since the mid-1970s, late 1970s. And I'm interested in it. But I don't want to let that bleed into my decision process because well, I've done other videos about that. I'm not going to bore you. This is a story. And I'm stuck 2% down. And what are you going to do? Is that luck or bad luck or lack of skill? No, it's stupid. Because the major releases tend to be very volatile. We're at the end of the fourth quarter of the year, and so this is 2025. And so the price action becomes very volatile and unpredictable in the currency market during that period because everybody is settling up, getting ready for the new year. And I've done videos about that. Regardless, to say you have to be careful during the fourth quarter, more careful than you are during the regular year as far as just putting orders in, thinking that things will go, quote, normally, because they don't. That's not a lucky observation. That's an observation through experience, which adds to my skill level. When I'm teaching, I have what's called a fast track program. It runs for 6 weeks. But when I'm teaching that program, I'm teaching the mechanics of how you build rules and how you solve problems from a probabilistic standpoint using your trading metrics. Nobody else does that, but that's okay. You know, I got a degree in physics, almost a minor in math. I had a 33-year career as a software engineer, 40-year career in real estate. So I understand all this stuff probably better than most people do. That can be a problem too, because you think you know what you're doing, and then you go and you put your bet on the table and you get creamed and you go, oh boy, I was really unlucky. Was I unlucky that day, yesterday, when I put my bet down and the NFP went against me and I didn't remember that the NFP was there? No, I wouldn't say that I was unlucky. I was unskillful. I was stupid because I need to check those things. So when I'm teaching that fast track program, we're teaching what I call baseline stuff. And if you can do baseline, which means not a whole lot of profits, but not a whole lot of losses either, because you're trying to keep from getting creamed and knocked out of the game. And in order to do that, you have to reduce the amount of gain that you're looking for. But you first have, what the primary goal of the fast track program is to get you consistent, understand the importance of consistency, and then, oh, by the way, this is how you take care of the anomalies in the world that will happen. Whether that anomaly happens to be a 50 pip runner and you're trading for 8, 10, 12 pips a day and it goes 50, 60 pips, or maybe you ride it all the way and it's a Yahoo 200 pips, that's an anomaly. And so is a 20% loss of your account, which you'll have at some point. That's just the probability of it. You can't avoid that. You can drive as carefully as you want, but somewhere along the line in a 20 or 30-year career, you're going to get tagged. What, fender bender? You're going to back into a utility pole like I did one time, crash my car. Life is based on probabilities. Now we can look at an event and we can say, oh, I really don't want that to happen. I can look out. I looked out the door yesterday. We're in the tail end of after a really big snowstorm, and there's ice on the ground because the temperatures are warming up. You can see behind me that there's snow all over the place and the sun is shining. And so I was going to go out and get some wood for the wood stove. And I looked at the ground and I said, there's a problem. There's ice there. So I'm carrying 4 or 5 logs. I'm 76 years old, so I'll carry 3 or 4. Carry 3 or 4 logs in from the wood pile. And I got to cross the driveway where all this ice and accumulated snow is. That's a real danger. Now, I can avoid that danger in 2 ways. I can mitigate the risk, or I can just avoid it. So I could have chosen to simply not gone out and got wood that day, or I could try to figure a workaround to mitigate my risk, the risk being slipping on the ice. Well, I don't have every day to carry wood. I got stuff to do. So today's the day to carry wood, or that day was. So I went out, I threw some salt down, I threw some sand down, I got the chipped out some of the big chunks of ice to break it up, make it rougher, and then I carried my wood in. When Sue got home, she went to get our granddaughter, and we're going to have her for the day. And the granddaughter comes flying across the driveway, and down she goes. I had carried in two big landscaping carts or garden carts of wood. It's about 20 or 30 16-inch logs per cart load, so carried quite a bit of wood. And I didn't slip and fall, but I had been aware of the risk, and I mitigated it for the extent of what I was going to use it for. My granddaughter, who's 3, doesn't understand any of that stuff, and she just hauled ass out from the car, and down she goes. A few tears, she's up, and she's gone. In that event, her lack of information got her into trouble because she didn't, and she doesn't have the skills to mitigate that risk. So when I'm teaching somebody, we have to talk about risk management. And do you want to simply avoid the situation? You know there's an NFP event coming, so you just stay out of it until all the shit's done with. Or you say, I think from a probabilistic stance, there's a really good probability that the price will go in long or short, whatever you're going to do. And you can put limits down, or you can market your way through as the price reacts the way that you thought that it was going to, or you just hang on the side because you don't. You're mitigating your risk of that event. If you don't know that the event is there, then is it bad luck? Is it lack of skill? Or is it stupidity? It's stupidity not to know that the event was there. And so in Fast Track, how do you cover all that stuff? Well, first of all, we have to identify the problems that we face. After we establish that consistency of trading, what are we preventing you from doing by having that consistency of trading at a 20% yearly return rate, 20 to 30% yearly return rate, which is our target, which is a very conservative trading plan when everybody's trying to make 400% a month. Okay, so what are the problems that you're going to face in just being consistent? Well, you have to deal with stops and you have to deal with limit closes. That's all. So now, what are the problems that we have eliminated by putting certain constraints on the rules? Oh, well, it could have done this, or it could have done that. Or okay, well, let's investigate that. Is that something? What would cause an event like that to happen? And then we talk about, oh, well, there's a thing called this financial indicator, NFPs, housing starts, unemployment, jobless claims, personal consumption index, manufacturers index, those sorts of major economic indicators demonstrate how the economy is going, and how the economy is going is how the Fed balances what they're going to do with the interest rate policy. And it's the interest rate policies that the dog in all this stuff, because if interest rates are going up, your currency value is going up. If interest rates are going down, then probably the value of your country's currency is going down as well. That's a general statement, but from a probabilistic standpoint, that's a pretty good gauge. So the interest rate policy is the dog in this. So we talk about that. Well, what causes the interest rate policy to change? And here's 3 or 4 of those indicators. Do I have to know economics or teach economics to mention that to students, or to have the students recognize the importance of those indicators? No. You just, look, if you're driving your car down the road and there's a sign up ahead that says washout, careful, well, you don't need to know what caused the washout. You don't need to know what the weather conditions were and what the ambient temperature is in relationship to the dew point. You don't need to know any of that shit. All you need to know is that a washout means you can't drive your car right through there if it washed the whole road out. You're going to have to either find an alternate route, or you're going to have to drive around it. That's all you need to know. Now, you may be interested later in learning why the mountainside washed out and why that pressure knocked out the road, but that's entertainment. That isn't driving the car. Knowing that the non-farm payroll is there is all you need to know. Now, whether you decide that you have the skill to mitigate it or not is the question you have to ask yourself. If you don't have the skills to mitigate it or you don't have the experience, you don't trade NFP. You don't trade an hour before or an hour after. Let the dust settle. So is it Forex trading luck or skill? I don't believe in luck. I believe in probabilistic outcomes with bad luck being stupidity, that you don't understand certain key things because somebody out there is teaching you to know everything. In the Fast Track program, we start off, I don't teach beginners. The Fast Track is for somebody who's got some experience. You made, I don't know, trading a live account of at least $1,000 and you've got 50 to 100 trades behind your back and you've traded over about a 6-month period of time. That's the criteria that I'm looking for somebody that I can help trade. And primarily in the 30 to 50-year-old age group, because you guys that are younger, you just want to shoot the potatoes and try to hit 20% returns on every trade, and you're not being realistic. If you like to understand what the reality and responsible approach to trading is, send me an email. I'd be happy to discuss that with you. And then you can determine for yourself, based on that information, as to whether you really want to pursue the path that you are going on or whether you'd rather pay attention to risk management in its true sense of the form. Not because somebody says, oh, only take a 2% loss against your account. That's just bullshit. That's useless. So, back to my story. I got my ears jammed really bad, and I'm sitting there with over a 2% loss that occurred in 5 seconds. And the price has gone shooting up, and I'm standing there. I'm sitting there. And I'm not sitting there because I'm frozen. I'm sitting there because it's absolutely contradictory to my probabilistic view of what the market should have done that day normally without the NFP, because I didn't know the NFP was coming. But I did say, and I looked at price action and I said, this should be from a probabilistic standpoint. Here's my 4 conditions I got to meet for entry. One of those conditions is not true, so I'm not ready to go in right then. But all the other conditions are there. And so that's why I put my order where I put it. If I would have known that the NFP was there, I don't know what I would have done, because everything is situational. I can't tell you, well, I would have looked at it and evaluated it in terms of the NFP and decided to do market orders and tag the thing on a laddering and go up and just clip off 15 or 20 pips go in both directions. Or I just go get a cup of coffee. I don't know. But what I do know is that price action that occurred then, based on my experience, and this is why I only trade one currency pair, so I get familiar with it, was an anomaly. You don't trade in the direction of an anomaly. Because from a probabilistic standpoint, from a statistical standpoint, from a mathematical standpoint, anomalies regress to the mean. There's a whole branch of traders who do, they call it mean reversion, but that's a mathematical term that's used for something else, but it's regression to the mean trading that takes advantage of those anomalies. Now, the anomalies don't happen often enough, I think, to because you'll get those. Sometimes they'll be there, but they'll only last for a short time. You can't take advantage of them. So I don't believe in trading them unless you're really aware of what the limitations are, and that's based on the price action and your experience and all the rest of the stuff. But when I'm looking at that reaction of price to the non-farm payroll numbers release, I went, that's an anomaly. And so I'll sit here. Well, how far would I go to sit there before I said, I'm at the pain point? Well, 2% is a big number to sit there, but I was already beyond 2% on that flag. That thing just went, phew. So where's my next pain point? I don't have one. Because in those situations, I have a high probabilistic expectation that price will revert back, because the reason for that huge anomaly in the total opposite direction than where normal price action should have gone, that type of an event is unstable. Sorry, this is a cut in to the video. I got to the end of the video and I realized I hadn't said what happened to me after the price went against me, and it went 2% against me, and I'm sitting there making a decision that I'm not going to get out, that I'm not going to take that loss, that my probabilistic evaluation of the market was such that this was an anomaly that would regress to the mean. Okay, I left that position on. I'm a day trader, so usually I'm in and out and done in 2 hours. I let that go in a carry trade, or an overnight trade, and woke up the next day, and I had set really aggressive get out of Dodge stop limits to get out of the trade, and I made 4% against my risk on the money. So at one point I was over 2% down. I held because of my convictions and the probability that I was correct in my initial evaluation, negating the NFP, that the NFP was a total anomaly. And I stayed with that conviction, and instead of making, a normal, I looked to make 0.5% or 0.8% a day, 0.3% a day on my money. I made 4%. Right now, Treasury bills are paying just a little over 4% a year. And I was able to do that in a day. Is that luck or skill? I don't believe in luck. I think my skill and my experience gave me the confidence to do the carry trade. And because of the violent nature of that reaction to price action from the NFP number release, I set a very, very, very aggressive limit stop to get out of that trade at a 4%. And I didn't even know that it was 4%. Didn't even know what it was in relationship. I only evaluated the structure of the market and what my feelings about the momentum of that market when it retracted. Well, it's just like throwing a ball against the wall. You throw the ball against the wall and it pops right back at you and against that wall, and then it has a little less strength. And so that the violent reaction is going to create a violent, over maybe a longer period of time, reaction to that. And that is based on my knowledge of the probability of what happens to that particular price action in that currency pair that I've been trading for years and years, that's what would happen, and how the economy of the two countries was doing at that particular time. And I set that as a long stop. And quite frankly, if I would have been awake during that period of the retraction, it happened like overnight, but if I would have been there, I probably would have got, instead of 4%, that trade probably would have been I don't know, probably a 7 or a 10% return against my risk. That's huge. But 4% was fine. If I would have set that stop and I would have got out a percent up, that's fine. I would have been a 1% up for the day. Anyway, back to our regularly scheduled video. In thermodynamics, we study systems that are unstable, and that's where chaos theory comes in with the concepts of entropy and thermodynamics and all that stuff. Do you need to know all that? No, it's just fun factoid information. All you need to know is that in a radical non-farm payroll or indicator release, in a radical movement and anomaly against the general, I mean, here's an ocean liner and it's just, it's going in this direction and it's slowly turning to the right. And all of a sudden, there's a clear path of water or whatever, and you want to turn and go that way, and the captain turns. You're not going to get that ocean liner to turn. It might take 2 miles for that son of a bitch to turn. It's going to continue to go on in that direction. Now, one of the lifeboats might have fallen off the boat and gone in that direction, but not the ocean liner. And so, where's my pain point? I'm a speculator. I trade with no fear. If I got to go to the wood, I'll go to the wood. That's just the way it is. Do I teach that in fast track? No. You're not ready to make that determination whether you want to do that or not. I don't understand how you're going to be successful trading based on the information that's available to you out there and the way that that information is being presented to you. I've been involved in the martial arts for over 50 years, 58, 57 years, something like that right now, and actively taught it for 50 years. I'm an educator. I understand the educational process. I got a degree in physics, almost a minor in math. I understand the formal educational process. I'm an educator. So I know how to present things in the proper order. Is there a time where you go, if this is going to take me to the wood, I'll go to the wood because I really don't think that my risk of ruin is there. And I'm confident that if I get a risk of ruin, that I'll come back. Not wring my hands and say, oh, how bad is that? Now, that can get you in a lot of trouble. You know, a couple of years ago, that's what happened to me. I played one of these things and I walked away from it and did an overnight carry and it margined me out. Steep 6 figures, gone. I'm still trading. I'm still trading today because I love to trade. That was my decision. It wasn't bad luck. It was a decision that I made based on probabilities. If you don't have that experience, you don't make those decisions. Instead of trying to figure out how to mitigate the problem, you avoid the problem. That's what you have to do. So is it Forex trading luck or skill? It's skill based on your probabilistic view of the market. And that probabilistic view is expressed to 100% in the math. But it will take you, if you're not familiar with working with the math, it may take you a while to gain the confidence in the math that you have and the same confidence that you're driving your car. If you're driving your car and you want to turn to the right, you turn the wheel to the right. The math shows you that the steering wheel turning to the right works the cams and gears to turn the wheels so that you go to the right. You don't have to know the math in order to be confident that when you turn the wheel, the car will go to the right. And in trading, it's the same thing because everything in nature is the same. That's my martial arts view of the world. Lao Tzu said, to know oneself is to know the 10,000 things. And so you look at the market as part of the nature around you, and your interaction is part of, and your existence is part of the nature around you, and so you have an interaction with that nature. And you look at thermodynamics and how things correlate together, how systems come together and cool, and their entropy goes, all this other kind of stuff. But you can observe that in nature. The I Ching, Book of Changes, Chinese Book of Changes, is one of the greatest books on natural philosophy that you can have. What does the wise fox do when he's trying to cross the river? He doesn't just jump into the river. He runs upstream against the direction of the current and then slowly gets in and generally paddles his way across, and the river gets him downstream back to where he needed to get to, and his paddling gets him across. That's what the wise man does in entering any event that contains risk. And so in Fast Track, we work on that baseline skill development, and then we talk about the anomalies, and then we talk about avoiding the anomalies. And then we talk about what do you need to have as far as skill level and knowledge of probability analysis in order to accept the risk, but understand that the mitigation that you're using will work. Simple mitigation, set a stop. But it's much more complex than that at a higher level. If you have any interest in this stuff, I'd be happy to talk with you. As I say in every video, send me an email. I'd be happy to chat with you, even get on a video chat call with you with no pressure to sell you anything. I have a course. If you want to talk about Fast Track, that's great. I don't take on a lot of people. Probably 99% of the people I talk to don't even have any interest in taking a course from me. But that's fine. We just talk, and I try to help you the best I can at no charge. Because not everybody will agree that they can trust the math and the probabilities with their money. But that's just what everybody that knows what they're doing does. And the people who don't know the math have learned it by losing all their money many times and finally learning what not to do. So you can take that path, not understand how to mitigate the problem, and just continue to lose money until you figure out what not to do. And then you can be successful. Or you can get into a program, a course or something, and get there that way without getting beat up too badly. You'll still get beat up, but not too badly, I hope. Is Forex trading luck or skill? It's skill based on your experience, which in turn is based on your understanding of your trading metrics and how they apply to building strong conditional rules that you, as an emotional human being, agree to follow without getting your emotions involved. And the biggest concept there of the luck or skill is that if you're aware that big problems exist, then you either avoid them or you have the skill to mitigate them and accept the risk of whatever maximum amount of damage you want to take on at that point. You can take on and mitigate a skill like I did with carrying the logs in. There was a chance that I would hit a slick point and fall with all those logs. And my granddaughter, that's what happened to her. But I was willing to accept that because I would feel that going because of the things. I'd throw the logs and I'd fall down. Probably not a good idea at 76 years of age, but I don't recognize my age as 76. It's not too crazy for that. I'm trading currencies every day. How worried am I about anything? And after 58 years in martial arts, I don't think anybody could hurt me any worse than I got that way. So I really don't have much fear of anything. If you have questions, you just want to chat with me, send me an email. Send me an email. That is the only way that I will communicate with you. Not if you end up on a fake channel of mine and I'm telling you to send me money or whatever, it's not me. You must send me an email. I will communicate with you with email. That's the only way I do it because your safety is my primary concern. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.